Get ready for an unforgettable night of glitzy glamour and good fun. The Posh Gala Ball is back at Cancer Council New South Wales' premier fundraising event. This year, you'll be transported to the breathtaking Amalfi Coast for an evening of elegance and great entertainment. Join us on Saturday, May 17th at the Fullerton Hotel for a night of fine dining, dancing, and over 100 extraordinary auction items to bid on, from luxury escapes to coveted Wimbledon tickets. Hosted again by the incomparable Vince Sorrenti, it promises to be a night like no other. With nearly $23 million raised since 2000, Posh continues to help make a difference for all people affected by cancer, and your support makes it possible. Be part of the magic and grab your tickets now at cancercouncil.com.au/posh.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, good day, everyone. It's Liam Garman here, editor of SPI, back today with another episode of the Smart Property Investment Show. And as always, I am joined by my co-host,
Emilie Lauer,
talking about the latest in the world of property. Now, we've actually got a plug, Emily, don't we?
Yes.
We have a shameless plug, and we're going to shamelessly tell all of our listeners to go on, because like a butterfly emerging from its cocoon, you were like the hungry caterpillar.
I was.
You came on to the SPI show. You learned everything there was to learn about property. You spun your cocoon, and now you're emerging from your cocoon because you're launching your own podcast.
I am.
Talk to us about the podcast.
So, you know how when you want to start your property journey, it's actually really hard to know where to go and who to talk to. So we started the first property buyer show to actually get everyone on board on their property journey, help them do their research, understand what is the market, understand the jargon, all the property ins and outs, and have them in one podcast, easy to listen to, easy to get all the information, and basically do the work for upcoming buyers. So whether you are a first-time owner-occupier buyer or a first-time rent-vestor, this is the pod for you. Or if your friends and family are in that position, and rather than you explaining everything to them on and on and on and on again, just send them our way.
100%. And one thing I like about it is it's not pulling the wool over their eyes. You know, what you've done, sorry, Emily, what you've done is, well, I was your first guest.
You were my first guest.
I was your first guest.
So what we've done is fine.
You know, where I just said, hey, you know, these are the mistakes that I made. You know, these are the tips that I've got. If I could speak to Liam of a few years ago when I was going through that journey, here's what I would have done differently. And here I would advise young people to do and where to start. And you've had a few really awesome guests on, from brokers to agents to buyers agents. And even one of your shows I know that you've got coming out shortly. I know you've actually recorded a lot of episodes, but we're only on episode 2 being released, right?
Episode 3 is being released tomorrow.
Episode 3 is being released. So, I mean, for our listeners, if you go and look at the first property buyer show and you realise that not all of them are out yet, they're coming. They're still coming. But even stuff like, you know, what the hell does stuff mean?
I know, right?
Like, and you have it all the time. And the challenge is for a lot of first property buyers that you ask your mum or your dad or your brother, your sister or your cousin or your agent, hey, what does this mean? And then they give you a 20-minute diatribe telling you, no, don't buy there, buy here, don't buy this, buy that. And it becomes too much. And half the time, the advice is wrong.
And everyone has an opinion.
Everyone.
And look, I think at the end of the day, when you ask your friends and family, look, it's good advice, but they always act the way they would have with their money. And it's not your position. They see it from their point of view. While us, we give very more generic advice targeted to everybody on factually based, markets and jargon and property and all the experts come in. It's not your mom and dad's advice. It's
and
the
you don't want that because, I think it's reasonable to say that your mum and dad's advice, it's pretty
outdated.
Well, on the one hand, it is outdated. You're right. It is super outdated because I know that this isn't the pathway that, say, you and I are on and that we've picked, but we are seeing the phenomenon of rent vesting come up. And we've actually had a lot of episodes on SBI talking about rent vesting because simply the yields are better buying multiple places outside of, say, out of urban areas in some of the smaller capitals than maybe buying a nicer place in Sydney. That's not for everyone. But hey, a lot of people have put that argument forward and very reasonably so. But that's not necessarily been conscious and top of mind for the mums and dads out there. Even a lot of BAs and real estate agents. Now, the BAs that we've got on SPI, we work very closely with them. We vet them. We know that they're really good. But some of the other ones you see online, they might not actually be up to date with all of these notions, right?
Yeah, 100%. And look, I think it's also true in the other way around. I think a lot of people are pushing rent vesting nowadays. And if you want to be an owner-occupier, you're like, oh, am I making the right decision?
That's true.
Should I go into the rent vesting space? And look, there is no right or wrong answer. And you need to do what is right for you and your portfolio and your journey and what you want to see
and
in your
comfort
future.
Levels, because, one big argument is that we've all got our risk profile. And when we had John Storman on last week, I think it was released last week.
Last week.
When we had John on, and it was a great episode. He's an amazing financial advisor, financial planner. And when we started talking about risk profile, and he laughed. And he's like, we hear this all the time. And it's true, but we all have our risk profile. And starting off with your PPOR or owner-occupier is one very reasonable path to making yourself very comfortable before you go into the world of property investing. Everything's right. One thing that we do talk about in the first property buyer show, though, is setting your goal and knowing where you want to be, because all the smart cookies that we have on this show say the one thing that you should be doing is setting a goal and then reverse engineering and going from there. So where can they find the show, Emilie?
Well, it's on all your favorite platforms, podcast platforms, and it's called The First Property Buyer Show. So quick Google search.
And Instagram. Follow us on Instagram.
Yeah, we do have Insta. We've got mean reels coming up.
Yeah, 1 million reels. But I think there's only going to be one by the time this goes out. But go on Instagram, follow us, show us some love, because we're going to be working tirelessly to make sure that all of our listeners are informed and armed with the latest knowledge. If you have any questions, if you yourself are a first home buyer, anyone else is a first home buyer, reach out to Emilie, send a message to her via the SPI website or via Instagram. If you have any shows that might be worthwhile for Emilie to touch on, any topics, reach out, and I'm going to volunteer you.
Yeah, we actually have an email. It's editor@firstpropertybuyer.com.au.
You've actually got an email address
I do have an email.
There you go. Do that one.
Send us an email, reach out to us, or just, send us a DM on Insta. We'll read them.
Yeah. Now, we've got a very interesting show coming up where data.
Yeah.
And I love going through the data because data don't lie. Data don't lie, doesn't lie. And there's some very interesting headlines from some recent data, but the world of property is always very interesting because you have a lot of people that view it as a get-rich-quick scheme. And unfortunately, in a few moments, if you bought in a specific asset class in a few cities thinking that property was going to get you rich quick, I've got some very bad news for you. But all in all, it's not looking too bad. Emilie, what are we seeing with house prices over the March quarter?
Well, house prices across, combined capital city and regional area, they've increased. And they have continued increasing for the 9th consecutive quarter to a median now of almost 1.2 million, which is mad. And that is actually the longest growth stretch since 2012, 2015. So that's quite good for house buyers there.
That's madness.
It is mad.
1.18 as an average across the combined capitals.
Yeah, which we'll go into Sydney prices afterwards. But over the March quarter, the prices, they rose by 0.7%. And that's nearly a 5% year-on-year increase. In the regional area, the houses, they grew by 2.4% over the March quarter, which is more than in capital cities, and that's nearly 8% on a year-on-year annual price growth. And now regional area are at $659,000 on the median house price.
So it's going up steadily,
It's going up.
but the good news doesn't last.
Yeah.
Our unit buyers out there haven't had the best quarter.
No, unit prices, they've declined by 0.4% over the March quarter. So look, it's a small decline, yes, but it is the first decline by unit in 2 years, which is quite massive in the sense that it hasn't happened. Now, the price now dropped by $3,000, which is not that bad.
Not too bad.
It's a small
Not too bad.
decrease, and the median unit price across the combined capital cities is now at $670,000. And for regional units, now that's the good news, they increase by 0.8% over the quarter to $507,000.
Now it is interesting because we don't have a crystal ball, and obviously we can't offer financial advice, but what we're seeing in the combined capitals is we are trending to high density living, or at least medium density living. That is the trend. We live in apartments.
Yes.
Right. I don't really think that there's going to be an Australian living in a major capital, of which I probably wouldn't include Brisbane. Let's just say Melbourne and Sydney. Melbourne and Sydney, there ain't going to be really many people under 35 that are going to be having their own houses.
No.
Right. So, and we know that, so people are moving into the apartment market. At the same time, growth to high medium density with the National Housing Accord. I know the state government in New South Wales has approved fast tracking for high density in certain areas.
Yeah.
If everything lines up well, and we do need to fix affordability. We have a property investment podcast. We want to support property investors, but hey, we need to balance this out. We need affordability as well. If you want to support affordability, there's going to be a lot more supply of units coming on board. With increased confidence from interest rate cuts, I'm not feeling overly confident about my unit at the moment.
Look, so in Sydney, prices didn't drop for units.
Oh,
So that's actually like the good news. The prices dropped in Canberra, they dropped in Melbourne, they dropped in Perth, and they dropped in Darwin, with Canberra having the highest drop by 5.7% over the March quarter.
In Perth as well. That's very
Perth,
surprising.
Yeah, so Perth is actually, I don't want to say losing momentum because that's going to be like a big, like a headline.
That's a headline. But
That
thank
is a
God you're the one that
headline.
writes the headlines.
I know,
So we won't write that headline.
But Perth decreased by 0.9% or nearly 5K.
Yep.
Like 4,700.
That's quite substantial.
It is.
So now I know you've got a lot of this data. Now let's compare it to the Perth house market, because Perth, over the last few years, it's seen almost double-digit yearly growth.
Yes. So we're still on that trend. So Perth houses 0.1% growth over the quarter, March quarter. Now edging
That's slower. That's far
very,
slower.
very slow. But nearly $917,000 as a median house price, and expected to join the $1 million club by the end of 2025.
Does the maths add up for that? If we're gonna,
We'll see. Expected, forecasted. Now, the annual growth for houses in Perth is still double digits, 14.1%.
Yep.
Now, we said units have decreased in Perth by nearly 5K over the March quarter. That ended a 7-quarter growth streak. Mm-hmm. However, it is still the strongest annual unit growth with 19.1% annually.
Going down for Perth units, dropping by 0.9% in the quarter, given that you're annual unit growth is up 19%. Okay, it's a bit of a rounding error.
Exactly. Like
it's
really marginal. Like that's why, the losing momentum is tiny one.
Yeah. Now, they were edged out. If we go back to house prices, Perth was edged out to the $1 million club by Adelaide with a 1.1% growth in a quarter.
Yes, and it's the first time that Adelaide is actually joining the $1 million club, making it less affordable than what it used to be.
Oh, yeah, that's reasonable to say. Annual growth, Emilie, your data, annual growth slowed to 12.1%. Slowed.
Yeah, slowed. That's the slowest they had in 15 months.
Wild.
Yeah, and that's what they call slow in that report.
Yeah. The Sydney recording strong prices, Melbourne recording okay prices. Do you want to take us to the Sydney Melbourne markets?
Yeah, well, Sydney is still the most expensive city to live on for houses and units, and we are now nearly at 1.7 million in terms of median house prices, which marked also one of the strongest quarterly gain in nearly a year with 1.7% of quarterly gain. Now, Melbourne is, for houses at least, on the beginning of its recovery. With a 0.3%.
Are we going to say recovery now? Oh, is this? Oh my gosh! Are we going to have this argument again? Yeah.
No, look. I guess it depends on what type of buyers you are in Melbourne.
Yeah.
If you are first property buyer or owner occupier, in Melbourne,
I'd give it a nudge just speculating. I'd speculate in Melbourne.
Yeah, taxes in Melbourne is for investors very high still.
It's a couple of grand a year. It's not substantial if we're talking about, Adelaide. Adelaide's average or median price only $30,000 less than Melbourne. Melbourne's going to have a far more buoyant population than Adelaide is, and far more financial growth.
The data is showing a slow-ish recovery for Melbourne because we have the second consecutive quarterly rise for increase prices.
5.2. Read us that statistic.
Okay. Prices remain 5.2 below the 2021 peak.
Wild.
Yeah, Melbourne's really had its tough.
How do you have national house price growth where almost everything else, every other city's in double digits except that?
I will not comment on
underlying economic issues there.
Canberra is doing pretty bad too, I have to say.
Oh, there's a reason for that as well.
Canberra is down 10.6% from its June 2022 peak.
Yeah, I wouldn't wish that on anyone
to
live in Canberra, so that makes a lot of sense. Prices dropped 1.3% to a 15-month low.
Yeah.
Yeah, wow. I know we're not offering financial advice.
No. However, I want to point out also that for the first time in 2 years, ending the city longest growth streak in 17 years, Brisbane had house prices fell over the quarter.
Brisbane, you let us down. Australia was watching you with so much enthusiasm for years.
0.3%.
We were watching you with so much enthusiasm for years. The Canberra, look, I'm going to go back to Canberra. I'm sorry.
Go back to Canberra.
I find it, maybe these statistics I've got to balance out because I just said I wouldn't buy there, but I've got to balance it out with, if the cash splash of this federal election's anything to go by honestly, I've got some opinions on this. Honestly, it's just, you look at these promises and you're just plucking money from thin air. It's, and $1 billion for you and $40 billion for you and $5 billion. It's made up numbers. At this point, it's just I've actually been told I'm not allowed to swear on this podcast anymore. You're just making stuff up. It's mind-boggling. It's just, where our budget deficit is just out of control. Our debt is out of control. And we're just plucking cash from nowhere. Maybe you buy a few more public servants in Canberra because, they seem to have enough time and enough spare cash. So, maybe Canberra will become a a vibrant place to buy an investment property. Yeah.
One of those hotspots.
Maybe it'll make the hotspot one day on
we never know. We might listen to this pod like in 2 years and be like, hey, you might have predicted the future.
Well, with another
Canberra being the
30,000
hotspot,
public servants going to Canberra, and then suddenly with their pockets, they're able to afford more.
I cannot say anything. France has a lot of public servant too.
Yeah, they do.
Unfortunately.
Yeah, what is it, like a 45-year-old retirement age or something?
Stop it.
Yeah. Anyone tries to touch that is burn down Paris. Okay.
God, yeah.
Now, there are, what am I saying? A few cities where we do have a pretty buoyant unit market.
Unit, yeah.
Yes.
Yeah.
What are we saying? What are some of the people bucking the trend with unit price growth?
So if you want to get the best quarterly growth, you're going to go to Hobart.
Yeah.
Hobart. Got a H somewhere there.
The hard H, yes.
Yeah, I got to check it from my belly. So plus 6.6% over the quarter, which is $34,200, which is pretty nuts. Up to 555,000, nearly 556,000 median unit price for Hobart.
Now, for those of us who watch maths, we all followed Clint with a lot of enthusiasm when he was bragging about his massive place in Launceston. Hey, maybe buying in Tassie is the way to go.
Look, Launceston has the best croissant I've had in Australia, I have to say.
No, you've clearly never been to Lulu's in North Sydney.
Well, take me
Kirribilli,
there,
I think. Or is it Lavender Bay, technically?
Well, let's take the team there.
Yes, we'll take the team there, and we'll report back on Sydney's best croissant. Sydney.
Yeah, so Sydney prices rose for units by 0.4%, so good news for your units.
Va-va-voom.
To $823,467, which is the third consecutive quarterly increase. Annual growth actually slowed a little bit, though, to 1.8%.
But
the gap now between Sydney houses and Sydney units, 105% more expensive to buy a house.
Is that why you asked me the stat?
Yeah.
Okay,
we had a little guessing game.
I actually thought it was going to be more.
I think it's pretty big already,
it is pretty big, but I thought it was...
Yeah.
I thought the gap between houses and units, I would have plucked it at probably 130.
Yeah, that's what you said.
Yeah, I mean, just because, the amount of apartments coming online.
Yeah, but come on, like 105% more for a house.
It's true.
It is a lot.
Yeah, it is true.
It's like I knew it was a lot of money, different money, but I wouldn't have picked it like over 100%.
823 is a lot of expensive units.
Yeah.
That is a lot of expensive units. Is this?
That's median price. Median. So
because I would have thought that maybe with the mean, because you'd have the outliers in Double Bay pulling it up, but an 823 median is quite north.
Quite a lot. Yeah.
Yeah.
Thinking about refinancing your home or investment loan? Finny Mortgages makes it easy. Our team of expert brokers handle all the hard work, finding you the right loan at a better rate. Book a free no-obligation call today and see how easy refinancing can be. Visit finny.com.au or call us at 02 8866 2444 to speak with an expert.
And rounding out, Adelaide.
Yeah, small increase though. Small quarterly increase. $500.
That's a rounding error, Emilie. Third most expensive capital for units. And Brisbane.
So Brisbane units, compared to houses, Brisbane unit grew over the quarter by 2.1% or $13,300, which marked the 16th quarterly growth streak for the city. Now, despite being a 2.1% growth, that is the slowest growth they had over a quarter in 2 years. And the annual growth for Brisbane remains pretty high at 16.2%.
16.2% unit growth. Now, what I'm going to caveat that with is I would love to see that broken down by region.
Yeah.
Because I know there are some places kind of north central around Chermside in Brisbane that, honestly, every time I go back, it seems like there's 3 or 4 new tower blocks being built. I'd love to see that broken down by region because some of the unit prices that you have in New Farm and Tenerife, even as a Sydney side, are gobsmackingly expensive for units.
Yeah.
So I would love to see that broken down because I would put myself in the shoes of a Brisbane-based investor or buyer of an owner-occupier that given you have had such substantial increases in house prices over the last 5 years that you would have the natural progression of downsizers or first home buyers moving more into the luxury unit apartment market as opposed to buying a home.
Yeah.
And I would say that would contribute quite heavily to the 16.2%. But in high demand areas, I don't think you'd be seeing that level of growth in the suburbs.
Yeah, it's always complicated with those data because, it's a median price data and they get everything together and do a median, So when it comes to specific areas, we're going to have to look more in details. Now, I think Brisbane is going to see a lot of changes and further price increase with the upcoming Olympics.
Yep.
I know it's in a little while, but they were already starting to plan how the city will look like and, what is the transportation and how to actually integrate the new infrastructures they are going to build for the Olympics to be able to be used by, your everyday Australian afterwards. So this is going to keep on driving prices up if done properly.
Oh, I agree completely. And this is where we started the podcast, Emilie, which is you have to have your goal.
Yeah.
You have to have your strategy in place and reverse engineer it from there. And you and I speak to so many buyers agents and so many financial advisors that they're really good active investors and they'll find places in outer metro areas that are 500-600K and then they'll quickly go up 100-300K over a few years and you're going to be really actively investing and that's good. Not everyone has that level of that risk tolerance.
Yeah.
Not everyone has that willingness to do that. A lot of people do and they're doing really well from it, but that's not everybody. You're right. We got 7 years now until the Olympics. You've got billions of dollars in infrastructure coming through. What that also means is let's put on our economics hats now.
Yep.
For those not watching, I put a hat on. You have an increased bidding for tradespeople and builders. That's what we've seen, particularly in Sydney, where the previous New South Wales government did a fantastic job building the infrastructure of tomorrow. WestConnect's amazingly done. The Metro, fantastic, real city-changing stuff. But what that required was thousands and thousands and thousands and thousands of tradespeople and thousands of builders and construction companies and contractors and this and that, which actually, when you sum it across an economy, you're bidding from the same pool of workers and talent that you would be for new homes or new houses or new apartments as well, which is where you see that productivity decline. What that means in the Brisbane sense, when you have billions of dollars of infrastructure spending come through, your ability to quickly and rapidly build these new suburbs in the matter of months or build these massive new high-density living areas actually becomes constrained because, well, if you're a tradesperson in Brisbane, you can earn a bank in the resources industry or you can earn bank working for the state government and probably less so if you're actually building homes, which is what we need for affordability. So I think you're on the right path there. I still I think it is a good longer term plan for Brisbane.
Keep an eye on it, honestly.
Yeah, watch this space. Now, rent increases, what are we saying?
Yes, so look, rents have continued to increase over the quarter. Now, they've increased, but they are a slow increase, which I guess good news for renters, a little bit of not as good news for investors. But still, rental prices across the country rose by 1.7% over the March quarter, which is about $654 a week across all dwellings, so houses, townhouses, units. Now, this also marks the slowest Q1 growth since 2019. Despite this, we still have a annual rental growth of 3.8%, which is less than half of the 8.3% peak that was seen in March last year.
That was wild.
It was wild.
That was huge. What are we seeing city by city?
So Hobart.
Back again.
So Hobart might not be might be keen to have a little look on Hobart.
Do you put the T at the end, or is it Hobart?
I would say in French, I would say Hobart. Hobart. I don't know. Hobart. I don't know. Do I have to put the T?
Hobart. It's kind of like
it's a smooth one.
What's any of our listeners that are linguists, is it? I think the linguistic term's a glottal stop or something. It's where you your tongue hits the roof of your mouth and creates like a stop
sound. Yeah, okay.
But it's like very subtle. Glottal stop. Hobart.
Hobart.
Yeah.
Okay.
Yeah. Any linguists that are listening, email me. I probably butchered that.
Well, Hobart has the highest quarterly rental growth at 2.3%. However, still remained the most affordable city overall. Perth followed suit with 2.2% to $710 a week. And it also led the national house rent growth at 2.0% and unit growth at 3.3%. Brisbane, 1.9%, Sydney, 1.4%. Despite not being the highest rental growth over the quarter, Sydney remains, of course, the most expensive rental market. Melbourne had a soft growth of 0.8% for all dwellings, which is 0.3% for houses and 1.6% for units. Darwin saw the weakest increase at 0.3%.
Now, what's the maths of all that? Despite only going up at 0.1% this quarter, and still probably actually our only major city that is not in the $1 million club, Perth, seems to have the strongest yields.
Yes.
And that's just quick maths looking at it, because the median house price in Perth, 917, which is lower than Melbourne, lower than Sydney, lower than Adelaide, lower than Brisbane, remains to be seen on Hobart and Canberra. 710 a week. Unit rent going up 3.3%. Now, one thing, that we talk to with a lot of our guests on the SPI show is using data to drive your investment decisions. Yep. Some of those can be days on market. If you see that if you go to a suburb and a property has multiple days on market, well, then you can say in good confidence that maybe there's not the demand there, so maybe you can have room for negotiation, or maybe the area's not as in demand or wanted as you thought, and using data like that. Now, I would be very intrigued to see why Perth's growth, and particularly unit growth, plus 3.3% over a quarter, I'd love to see why that is such an outlier, given most other cities, bar Hobart, are sub 2%. That I would look at that and say that they got no supply coming online.
Yeah.
They got no supply coming online, and that might lead to your prediction, which I poo-pooed before, of Perth joining the $1 million club by the end of 2025.
So, look, Perth still has the largest rental yield increase over the March quarter. That's 9 basis points to 4.34%.
Oh, did you actually get the data on this?
Yeah, I did.
Oh, well, I thought I was really smart by doing quick maths, but
well,
no.
You are very smart. I couldn't do those quick maths like this without a calculator.
I just saw the biggest and then compared it with the lowest and then just worked it out.
Very smart.
Yeah.
But no, we do have, I did gather the data for you guys, the listeners, and you, Liam. So Perth's largest yield increase, followed by Hobart, 7 basis points, then Brisbane 5 basis points, and Sydney 4 basis points. Darwin had the highest yield of the quarter with 6.56%.
6% yield.
However, it was the only capital to record a decline. That's on the decline.
Yep. Wow.
So nationally, the yield rose to 3.7% across all dwellings, which is the highest growth in terms of yields since October 2019.
Yep. Now, we have an election coming up.
Yes.
We're in the middle of global vicissitudes. No one's going to know. No one's going to know if they're going to wake up in the morning and go into the Daily Mail, as I know we all do, and see that trillions of dollars being wiped off the share market. We don't know what's going to happen. We don't know if we're going to wake up in the morning and there's going to be new conflict. What are we looking at? All we can do is work out the market dynamics and the outlook. Emilie, give us some of the headlines.
So look, we're going into the prediction realm right now. So nothing is 100% sure.
That is true.
We don't know until it happens. That is my little disclaimer, there. Look, from what we gathered by the big four banks, there's going to be a rate cut coming up at the RBA meetings in May. That it's on the 19th, 20th of May. So in about, 3 weeks by the moment this pod is released. Now, as usual, the big four, they don't agree with how many cuts there's going to be and by how much
Why
there's
can't
going to
we all
be.
just get along?
Oh, well, NAB is always having something to say. So
We love you, NAB.
We do. I'm at NAB, so yeah.
Yep.
So CBA, ANZ, and Westpac are predicting 3 more rate cuts this year. And NAB is forecasting 5 cuts, including one in 2026, and a double cut in May. So a 0.5% cut in May. Now, again, realm of, prediction and forecast and, mystery ball and all you want. We won't know until that happens. How is this going to impact the market? Well, it's going to boost demand. It's going to boost supply and buyer sentiment, competitions, especially in Sydney and Melbourne. Because those are the market that needs to be recovering, especially Melbourne, yeah?
Yeah.
Now, what I've gathered by talking to my experts...
My people, yeah.
...is that although the rate cut is going to increase supply because builders will be able to borrow more, developers will be able to get more money, it's going to be a slow supply. So it's going to be a mismatch in between the high demand that can come basically overnight and the supply that is going to take times to be built. So that's where we're going to have an increase in prices and an increase in competition because people will want to enter the market as the rate goes down rather than wait to see what's going to happen and the supply is not going to be there.
Now, I'm actually going to have to do a plug now as well because on Real Estate Business, another publication that you and I work on, Emilie, but tailored to professionals working in the real estate space. I actually did do a few podcasts over recent weeks, and I actually don't think they're up yet because I think we're recording this on the same day that we're releasing it. I recorded these this week to be released next week, so do watch this space. But with some construction companies and some of the trade shortages and one very candid conversation with Metricon, where the CEO of Metricon said, at the moment, we're sitting right about middle of that equilibrium. But with that extra demand, we probably actually, as an industry and as a country, we might not be able to get demand to that higher level, the supply to the level as needed. You know what that means? Higher prices.
Higher prices, definitely. Now, because I know my investors, listeners too. So because of the election, so what we've seen with the upcoming federal election is that housing has been a priority in terms of pledges. However, the priority has been really focused on first property buyers.
That's correct.
So it's clear from the government point of view, it doesn't matter which party, that they kind of want to plug people into the property ladder. So they're having all of those new schemes coming up with first-home buyers. But it's actually not going to impact investors straight away or not as much. So yes, the demand's going to come in, but there's still going to be renters there's still, even if like you say, let's say 20% of renters will want to go and buy their first property, there's still going to be a pool of 80% of renters for investors who rely on renting their investment property.
Yeah, I mean, that's going to be the case with immigration rates anyway.
Yeah.
You know, that's always going to be there, yeah.
And vacancy rates are still low. So that's actually a good thing for investors too. There's still a low vacancy rate. A lot of the country is still below 3%, which is pretty good. And there are still key hotspots under 1.5%, which should be targeted.
Now, you've got a point. Now, I'm going to admit to us cheating. I've actually got a printout of what we're talking about in front of me. And you got one line, which I think it's fantastic, and you did mention caution against panic buying.
Yeah, that was going to be my...
What do you mean with this?
Okay. So
I'm sorry, I stole your thunder.
It's the FOMO.
I had FOMO. I didn't want you to forget.
Yeah.
So, as in FOMO from buyers.
Yeah,
I thought you were saying I had FOMO from missing the panic buying thing. Yeah, okay.
It's like FOMO from buyers. Yeah. Like you look, from my little, my little experts, what they told me, my people, it's basically you've got a window of investment right now without giving any financial advice to anybody. Yeah. But you've got a quick window of maybe like a couple of months window where RBA rate cut technically is going to come in, house price is going to go up soonish. So if you're ready to buy, basically buy now. Because
that seems like we're encouraging panic buying.
No, it's if you are ready. If you know your area you want to buy. But if you're not ready, don't. If you're not ready, don't. So if you know the area you want to buy, if you have already your pre-approval, if you've got your finance sorted, if you know what type of asset you want to buy, if you're like just waiting for that little push, go ahead because you're still going to benefit from the rate cut. Your mortgage is going to go down anyway. Yep. However, if you are not ready, if your finances are not ready, if you don't know where to buy, if you don't know what assets you want to go, don't go FOMO and panic buying.
Emilie, I can give you the best example of this.
Go ahead.
No, I know the person too well. You don't know them.
I don't know them.
You don't know them.
Our listeners don't know them.
But we have a lot of listeners. And also, my wife will kill me because she listens to all of these podcasts.
Hey, Lauren.
Hi, Lauren. Yeah, she would actually kill me. But we have seen someone who we know that bought perhaps not the most ideal asset class in perhaps not the most ideal area where perhaps there are a lot more big high-rises coming up right next door to their big high-rise and perhaps it's not the best build. Panic buy. Don't panic buy.
Exactly.
Yeah.
So if you were basically leading for the little nudge, go ahead.
Yeah.
If you are not ready, don't panic buy. Because the market is changing.
Did I anonymize that well enough?
Yeah, I don't know who you're talking about.
But you don't know them anyway, so you wouldn't. So you wouldn't know what I'm doing. But I feel like they wouldn't be able to work backwards. Hopefully the team doesn't put this part to Instagram so they see it. That would be disappointing.
Well, if the team is listening, and if I were in the team, I would. Just because
it'd be quite funny.
Yeah.
Anyway, let's all cause Liam another headache. That is all we have time for today. Yeah. Thank you so much, Emilie, for all the data. Because actually, let's do another shout out because you've got your podcast coming up.
Yes.
Well, it's actually being released now. We're in the process of releasing more episodes. We were talking before about Emilie's people. People in the know, people that have got scoops. If people want to reach out, get involved with your new podcast and share some amazing insights, how can they get involved?
Well, just shoot me an email at editor@firstpropertybuyer.com.au or just reach us on Instagram, First Property Buyer. We're also on all the platforms, podcast, listing platforms, X, LinkedIn.
Are we on the TikTok?
No, I don't think we've got TikTok yet.
Ooh. Anyway, that is all we have time for today on the Smart Property Investment Show. And we'll be back in 3 days' time because there's a long weekend. But until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.